Hello there guys, welcome back to our channel. Don't forget to drop a like before we move on. Also, don't forget to subscribe if you're new to our channel. By clicking the bell symbol, you may also enable post notifications. Let's get started without further ado. NIO is a major smart electric vehicle business formed in November 2014. It's a Chinese multinational vehicle manufacturer. NIO creates luxury smart electric vehicles by designing, developing, co-manufacturing, and selling them. It's a leader in next-generation technology such as autonomous driving, digital technology, electric powertrains, and batteries. Traders can use this whale alert to find the next big trading chance. Whales are entities that have a lot of money. Traders are always on the lookout for situations where the market value of an option deviates from its typical value. Option prices could be pushed to hyperbolic or underperforming levels if there's an unusual volume of trading activity. When we look at trade, we can say that 40% of investors open trades with bullish expectations and 60% with bearish expectations. Considering the volume and open interest on the contracts, it appears that whales have been targeting a price range from $30 to $40 for NIO over 3 months. Right now, NIO stands around at a volume of 33,200,000 as of February 4th, and the price of NIO is down 0.67% at $24. And next earnings are expected to be released in 32 days. NIO stock has lost more than 30% of its value this year. Furthermore, NIO stock has lost nearly 2/3 of its value from its highs a year ago. The earlier strong rise, which sent stocks to all-time highs, was overstated. A statement was necessary. However, the selling is becoming a little excessive as well. On an oversold or underloved NIO, it's time to take a cautiously bullish approach. Its 9-day relative strength index (RSI) is nearing 25, and it's at its lowest point in years. The divergence of its moving average convergence is negative. Bollinger %B has also fallen into the Great Recession, although recovering. The momentum has shifted dramatically. The stock of NIO is currently trading at a significant discount to its 20-day moving average. When these indicators coincided in the same way in the past, it signaled substantial short-term lows in the stock. NIO stock was last around this price on October 13, 2020. This was just before NIO's massive upside breakthrough. The stock eventually stopped at its all-time high of $66.99. NIO stock options implied volatility is now around the 72nd percent. This suggests that option pricing is rather expensive, especially when contrasted to the 61% historical volatility. As a result, while designing trades, option selling methods are ideal. For a $19.01 net debit, buy NIO stock now and sell the January 2023 $30 call. The downside risk is reduced by the 16.10% by selling the January 2023 $30 call for $3.65. At the short strike price of $30, it also caps upside gains. However, assuming NIO stock closes over $30 on January 20th, 2023, those gains would amount to a very substantial 57.81%. The return on a standstill investment is 19.2%. Traders and investors with a long time horizon could consider purchasing a beaten down NIO stock and selling bid-up call options. When the company announced that it's notifying holders of its 4.50% convertible senior notes due to 2024 that, under the terms of the indenture dated February 4th, 2019, relating to the notes in between the company and the Bank of New York Mellon as trustee, each holder has the option to require the company to repurchase all of its such holders' notes or any other portion thereof that is an integral multiple of US $1,000 principal amount for cash. As the US SEC Securities and Exchange Commission requires, the company will file a tender offer statement on Schedule TO, the SEC. The depository trust company and the payment agent, the Bank of New York Mellon, will also have paperwork describing the terms, conditions, and procedures for exercising the repurchase right. The company or its employees have not made and will not make any representation or recommendation to any holder regarding the repurchase right. Each holder of the notes has the authority to request that the company repurchase all or a portion of their notes in an amount that is an integral multiple of the principal amount of US $1,000. The repurchase date is a payment date under the indenture and the notes term. As a result, on February 1st, 2022, the company will pay accrued and unpaid interest on all of the notes through January 31st, 2022. to all holders of record on Saturday, January 15, 2022 at 5 p.m. New York City time, regardless of whether the repurchase right for such notes is exercised. There will be no accumulated or unpaid interest on the notes on the repurchase date. The notes will have no accrued or unpaid interest on the repurchase date. The total principal amounts of the notes outstanding as of December 30, 2021 was US $165,291,000. The total cash purchase price, if the repurchase right is exercised and all outstanding notes are submitted for repurchase, is US $165,291,000. If you're wondering why whales rejected the offer, or if it's a good deal or bad deal, it doesn't mean that they are more confident NIO or not if we put US $1,000 principal amount of such note at any time to the close of business on the second business day immediately preceding the maturity date into ADSs at an initial conversation of 105.1359 ADSs in the bond of 2019. So if they had surrendered in a sense of this bond right now and gotten back $1,000 plus a bit of interest when they have to send a year, this would have been the most idiotic thing to do. They got a great deal. They bought NIO at 40% of its current price share in euros and more by 2024. It's like a leap option, but capital repayment is guaranteed. In 2019, the last convertible bonds paid zero interest, but this time it's different. These guys who lend money to NIO in 2019 are getting their reward with the 2.5 exit current share price by 2024. They will make a lot more money. NIO shares fell to a 52-week low on Friday as investors avoided more speculative investments in the early stages of 2022. While the Chinese EV manufacturer has been caught up in a broader sell-off of EV stocks, NIO has been hit particularly hard. NIO shares have dropped 64% in the last year and are down 34% year-to-date. Comparing, the S&P 500 index has risen 17% in the last year, but has fallen 7% since the beginning of the year. NIO stock has also been more volatile than two of its main Chinese rivals. Li shares have fallen 26% in the last year and 25% since the beginning of the year, while XPeng shares have fallen 36% in 12-month and year-to-date periods. In comparison, shares of Tesla, based in the United States, has risen 1% in the last year and are down 20% since the beginning of 2022. When NIO releases its monthly delivery figures this week, the stock could be put under even more pressure. Morgan Stanley warned earlier this month that Chinese EV sales for the sector could be lower than expected. Concerns remain about how NIO will fare in the face of China's reduction in EV subsidies, increased market volatility, and the deterioration of US-China relations. Fears about investing in stocks like NIO have been heightened by rising speculation that several China-based stocks may soon be blacklisted from US exchanges. NIO's production has been impacted in recent months by supply chain constraints and work to retool its manufacturing lines as it plans for expansion. In addition to announcing 2 new sedan models for this year, the company intends to expand into European markets. Its new flagship luxury sedan, the ET7, will go on sale at the end of March, and the smaller midsize ET5 sedan will go on sale in September. Despite a 25% year-to-date drop in NIO shares, the company's market capitalization remains close to $40 billion. However, if sales continue to grow as expected, investors may find this a good entry point, as the forward price-to-sales ratio is now less than 4. China has reduced subsidies for new energy vehicles by 30% this year and plans to eliminate them by the end of the year. Some investors may interpret the drop in deliveries as a sign of decreased demand. Long-term investors may want to keep an eye on NIO's sales to see if they can sustain its current valuation in the future, as global EV demand growth is expected to continue. The ET5 will cost around $50,000 before any available subsidies. Customers who subscribe to NIO's Battery-as-a-Service (BaaS) option, on the other hand, will receive $10,000 on the upfront cost and will be able to use the company's expanding battery swap network. This service distinguishes NIO from competitors and provides a subscription revenue stream. Last month, Chinese rival XPeng outsold NIO, causing some investors to short the stock before it recovered today. Even with slightly slower growth, NIO's monthly deliveries have been on an upward trend over the last 2 years. NIO has also been working to double its production capacity, with plans to expand in Europe this year beyond Norway, where it already has a presence. While the stock rose slightly today, its recent drop, along with that of other growth and technology names, may make now an attractive entry point for long-term investors seeking exposure to the EV sector. That's all we've got for you today, guys. Also, don't hesitate to thumbs up the video and subscribe for more entertaining content, and we'll see you again soon.